This MACD strategy I'm about to show you is an incredibly effective and easy to use trading strategy with that it brings in profitable returns. Now let's dive right in without further ado. The MACD, short for Moving Average Convergence Divergence, stands as one of the most widely used indicators across charting and trading platforms. Essentially, this indicator leverages moving averages to unveil trends and momentum in the markets, and let me tell you, it does an impressive job when combined with other indicators. Now, if you're an experienced trader, you've probably already heard about the MACD. It is used by professionals and beginners alike. But beware, if you are only using the MACD indicator and MACD crossover strategy by itself, it's not that great and hardly better than 50-50. That said, if you can hold on to a little bit later in this video, we're going to cover how to pair the MACD with other indicators to drastically improve those stats and make it perform so much better. Before we get into that, let's talk about the components of the MACD indicator and how I use it for profitable trades. So first up, we're going to zoom in on the indicator itself and take a look at its components. First up is the MACD line. It is calculated by subtracting the 26-day exponential moving average from the 12-day EMA. The calculation is designed to show the relationship between the two averages, and it does so in a way that places emphasis on more recent price data. Next up in orange is the signal line. The signal line is a 9-day EMA of the MACD line. In other words, it's a moving average of the difference between two moving averages, or a slower version of the difference between a fast and a slow moving average. Now I know this is all a little technical, so I promise we'll get to some good strategies here in just a sec, right after we cover the histogram. Now the histogram is the item you see here in yellow, and it shows the difference between the MACD line and the signal line and the magnitude of that difference. The histogram is charted above and below the baseline, which is highlighted here in yellow. Above the baseline is considered bullish, while below the baseline is considered bearish. Pairing the MACD indicator back to the stock chart, we see how bullish and bearish crossovers of the MACD indicator correlate to bullish and bearish movements in the stock's price. Now we're going to look at how we can increase our odds with other indicators. Next, we're going to look at a chart of Tesla stock, and we're going to add the relative strength indicator to the chart. You do that by going up to Indicators in TradingView and typing RSI. You then click on the Relative Strength Index indicator. Clicking on that will add it to your chart. And the RSI indicates whether a stock is overbought or oversold. It does that by showing a value below 30, which is considered oversold, or above 70, which is considered overbought. What I like to see is when we have a stock that is in the oversold territory and then has a MACD crossover up. This I use as a buy indicator. And if we were to have bought here, we would have seen that the stock then subsequently rallied. It rallied all the way into overbought territory. The next crossover on the MACD is our sell signal. So this is where you would sell the stock. As we look at this chart a little bit further, we'll see that there is some chop here around the baseline for the MACD. Likewise, there's no clear signal on the RSI whether we should buy or sell. So I would discard any crossovers in this range, as it's not a clear signal whether or not the stock is going to continue one way or the other. Whereas further down here, we see that we are oversold again, and the next MACD crossover would be a good buying opportunity. And again, if we repeat that, we wait until we're overbought and the crossover, and that would be another good trade. Another way I like to look at the charts is using Heikin Ashi candles. I have a whole video on the subject, so feel free to check that out if you want to learn more about Heikin Ashi candles. But I'll go ahead and turn those on right now. Heikin Ashi candles are really good at helping to find trends and reversals. As you see, when the Heikin Ashi candles have no wick on the top, that means that we're in a strong downtrend. And when the Heikin Ashi candles have no wick on their bottom, that we're in a strong uptrend. Oftentimes we'll see a doji candle, such as this one here, which will be an indication that there's a reversal at hand. You see one here, You don't see one here, but then you do see a number of doji candles here and one right here. So it's just another indicator that I like to use in addition to the RSI and the MACD to indicate it is time to start building a position. Of course, there are other indicators that pair nicely with the MACD indicator as well. Let me know what your favorite is in the comments below. If you found this video helpful, please give it a like. I do have other videos on indicators and ways to beat the market coming up soon, so please subscribe to see those videos as they come along. Thank you.